everyone, and welcome to Goldshore's live summit today, hosted by Six. We're joined today by Brett Richards, Goldshore's CEO and Director, and Peter Flindell, the VP of Exploration of Goldshore Resources. Brett and Peter are going to walk us through a company presentation, and after we will be accepting questions live. So just as a reminder, you can submit your questions at any time using the Q&A panel on the right-hand side of the screen, and we'll get to them after the presentation is over. And as always, the summit is recorded and available to watch afterwards on Six.com. But without any further ado, I'll just pull up the slides here and pass it over to Brett.
Yeah, thanks, Dasha, and thanks to everyone for taking the time this morning or the afternoon, wherever you are. And I have to apologize. I always get a lot of text about my colorful shirts, and today you got the absence of color. So I apologize. I'll live up to the standard next time. Today's discussion is really going to be around, where we are and where we're going. And for those who really don't know the story, I can quickly walk you through kind of who we are and what we do. I want to make clear that everyone should refer to our website for the forward-looking statement disclaimers and other other statements that we make on disclaimers. For those of you who are not aware, we acquired the Moss Lake project from Wesdome over 18 months ago. And at the time, we put together a team of people, both at the corporate board level and on the ground. And we started working on our program of, identifying what we had bought, analyzing what we had bought, and then putting a program together to, further advance the development of it. The Moss Lake project is in Ontario, and as far as mining jurisdictions go, this is kind of one of the best in the world. And what we acquired was 1.47 million ounces of indicated historical resource and 2.5 million ounces of inferred historical resource. So that was really, everyone thinks that's our starting point. And I think everyone needs to be clear that that's a guide. A historical resource, you don't build on a historic resource. You have to validate it and you have to verify it. But it is as good a guidance as you're ever going to get. So Pete and our team put together a pretty comprehensive exploration program. And that exploration program, started with, first of all, the analysis of the data and digitizing the existing data. And then we flew a VTEM survey, a mag survey over our entire property to give us the context, the geological context of the Moss Lake project, as well as East Coldstream, which is part of the aggregated 4 million ounce historic resource. They have 500,000 ounces at East Coldstream. And as well, the VTEM survey is designed to also give us context of some big conductors like North Coldstream. But it's a guide, and the guide leads us to the work we're going to do. In support of all this, we raised $25 million initially at the transaction time, and subsequent to that, we've raised another $25 million to be put in the ground. So $50 million has been raised over the past 18 months. I'm going to jump a lot of these slides because I think if anybody really wants to know some of the history and some of the detail, it's all on our website. But things do start with teams, and Pete and I are here today to talk to you, and you can look at our experience and you look at what we've done over the years, and the wins that we've had, and the wins of our board and the companies they're running today, and our advisory board. So I'll lead people to go to our website to do that. Where is the project? The project is about 120 kilometers west of Thunder Bay. And, when I do assessments on projects, yes, I look at people first and foremost, but second to that, it's certainly about the deposit. And when you start to look at a deposit and whether that deposit's going to turn into a project and whether that project's going to turn into a mine, I always look at infrastructure. And Moss Lake has probably the best infrastructure possible for any potential mine. We are on the Trans-Canada Highway. We're 130 kilometers away from Thunder Bay, which has an international airport, an international port. It has international rail that is almost on our site. And one of the most important things is we have the luxury of having Ontario Hydro 10-cent kilowatt-hour power going by our doorstep. And in comparison to mines that have to generate power through either diesel or hybrids, diesel power today is around 70 cents US a kilowatt hour, and hybrids around 50 to 60. So it's 5 or 6 times the power cost of what we have available here. I don't think you'll ever be able to find a spot with better infrastructure. So it's akin to being able to build a big district scale mining camp. And I think that is what we see kind of the vision and the long-term vision of this company. We see this turning into a large camp. Real quickly on the cap structure, we've got a 27% shareholder in Wesdome, who we acquired the project from. Board and management own 11% of this company, and the balance is split between institutional investors and retail investors. Today, I think we're trading at about 30 cents. It's been up quite a bit since October 31st when I did this slide, and I apologize it's not up to date, which is about a $43 million market cap, and nothing else has changed. And as of October 31st, we had $5 million in cash and burning about $750,000 a month. Just some shots of the site, where Pete has built up a core shack and a camp for our team. And another thing we take very serious is ESG. Our commitment to the environment has been strong from day one. Our commitment to our host community First Nations has been strong from day one, maybe even day -1. I think we were in contact with them before we actually listed. And we have signed exploration agreements with our host community First Nations. And we use an affiliated consultant to our Indigenous community who's been conducting our environmental baseline study for, I think, about 18 months now. So we're very collaborative, very inclusive with our communities, and Pete and his team have very good relations with them. So back a year ago, Pete engaged with Geotech to fly a VTEM survey, mag survey over the entire property. And I must say, and I'll just make a footnote, we acquired, we signed an earn-in agreement with White Metals to acquire a bolted-on piece of property as well. And just most recently, we flew a 550-kilometer VTEM survey over it as well. And what the original VTEM survey gave us was a number of targets which we focused on. And, some were conductors, with copper. And there's a lot of banded iron formations on this property as well. But there's a lot of, gold signatures very similar to Moss Lake as well. And that's what we were following, and that's what we were using the data. We're using the drill hole data. We're using the VTEM survey as a guide to try and help us, with the prioritizing our drill program, our 100,000-meter drill program. But there is mineralization all the way from this area in Moss Lake all the way up to East Coldstream, and we do have historic scout holes that are mineralized, but never pulled into the resource due to the distance and spacing of them. In around April, May, we started to get assays back with in certain areas with some significant high grade intercepts. And I think where kind of Pete started to make the pivot here with his team and his focus was, these high grade areas, these high grade lenses started to really hang together. We took a greater focus on them rather than at the time stepping out or infilling the massive 3.5 million ounce historical resource at Moss Lake. We started to really focus on this high grade, and you can see these high grade envelopes illustrated here on the slide, and excuse me, they do hang together quite nicely. So you've got this high grade resource that is sitting in this sea of low grade resource that is, under a gram but above cutoff of 0.3. So looking at the section, this is also quite open at depth. A 350-meter pit shell that we've used for this resource. The mineralization goes quite far beyond that, and I'll let Pete speak to some of that downhole and the potential that we have at depth. East Coldstream has a kind of a similar setting. It's certainly today it's not as big, but it has this high-grade mineralization sitting in this halo of low-grade material. One thing we're not going to talk about today is North Coldstream, because we haven't really done anything more than drill a few holes and put a press release out. And this all comes down to priority for us. This is a really exciting hole. It's a really exciting deposit. We have 62.8 meters at 0.88% copper equivalent, and it carries some very good cobalt grades. And our thinking was that this is most likely like a VMS style deposit, and the cobalt's a bit of an anomaly. We probably have to do some more work as to kind of why there's a cobalt readings here. So this was a historic mine that was run many years ago for a period of time, run by Noranda and picked up by Xstrata, and you can see the historic mine there. But there's a lot of work to do here. And again, we have to prioritize capital. We only have so much money. We can only raise so much money in this very difficult macro environment. And I think everybody has felt the pain in 2022 from the macro environment, whether it's the geopolitical situation that's going on in Russia and Ukraine, and then the heightened increase of inflation to the point of hyperinflation, where everything has really gone pear-shaped. And although everyone's heard my view of kind of the monetary systems around the world, and my view that the U.S. monetary system is quite broken. They're going to run a deficit this year of about $4 trillion, and they have a $32.5 trillion debt load to service going forward. And the intention is to run an even larger deficit in 2023 and 2024. We'll see when we get up to the primaries in the presidential election. But I think it's encouraging because we think our view is that the geopolitical situation will temper over the next 6 months. And leading into the primaries and leading into a presidential election, the Democrats are certainly not going to allow for a recession to happen in the U.S., irrespective of where inflation is. And that means one thing to me. That means they're going to have to print more money. Quantitative easing is around the corner. We're not sure how far the street is before we get to the corner, but it is around the corner. And they are going to they're going to have to print money in order to stem the recession and create some economic stimulation prior to a presidential election. So all of these macro factors are starting to turn the corner in favor of two things. First of all, a good gold price, because gold has been held back. We've seen the floor around $1,600, and I think gold has been held back because of the strength of the U.S. dollar. And it's not really the strength of the U.S. dollar, it's the macro factor on the euro and the pound and the franc that, the U.S. dollar is the cleanest shirt in the dirty laundry hamper. And that's the metaphor that I use, because they're all broken and all the shirts are dirty, just that the U.S. is a little cleaner than others. So I really think we're setting up for a very good gold environment, and I think we are going to see the second thing, and that's gold equities start to perform, and we haven't seen it yet. But I think at 1620 we may have seen the bottom of gold, and we've rebounded since then. Although gold equities had a good day last week, I think it's not one data point doesn't make a trend, and I think we need to watch this play out for the next 6 months. So we are cautious. We are going to be very cautious with how we move forward, but we have a very, very exciting story here. And we put out a press release yesterday on our updated mineral resource estimate. And we announced an open pit constrained inferred mineral resource estimate of 121 million tons at 1.1 grams per ton and 4.1 million ounces of contained gold at the Moss Lake deposit. And this is just at Moss Lake. It doesn't include East Coldstream. It doesn't include anywhere else, just the Moss Lake deposit. But the story within the story is this. It contains a higher grade shear domain of 34.7 million tons at 2 grams and 2.2 million ounces of contained gold. And when I look at that grade, and I look at mining that grade, focusing that grade, that project, that as a project, that is extremely attractive, and it's extremely attractive within the realm of our peer group, who, let's face it, those in production, producing, whether it's the Cotes, the Rainy Rivers, the Detours, they're running 0.72, 0.75, 0.8, 0.9 grams per ton. They're low-grade bulk tonnage style deposits. And I think we may have the opportunity to capture a higher grade project in a very, very small contained area, and put a much smaller CapEx project together down the road that focuses on this high grade. Now, what does that look like down the road? I don't know yet, because we're not done yet. Everyone thinks that you put this out and you're done. I'll tell you why we're not done. Although we've used the historic resource and we've used the data for it, there was a lot of work to clean that data up. But out of our 100,000 meter drill program, and we've drilled about 75,000 meters plus or minus, the last few days of production. But we've only used 48 holes from our 75,000 meter program to date, and we still have 52 holes that are not included in this estimate because the assays have not been received to date, or they were received after the cutoff point of establishing this mineral resource estimate. So in essence, what we're saying, and maybe what we should have titled, was this is an interim mineral resource estimate. We're not done. We're far from done. And we still have half of the drilling that we've done in the last 18 months. We still have half of the drill results to be put into another mineral resource estimate. But we felt it was important to provide our shareholders with information on where we were. The lack of information is always bad news in my view. It's why we're out here doing summits every month. It's why we're putting press releases out every 2 or 3 weeks. We want to communicate with our shareholders, and I think we've done a good job of that. The problem is the market has not been our friend. It hasn't been anybody's friend, and we're seeing gold equities trade at 52-week lows, and some of them still there. So I have a lot of empathy and a lot of sympathy for our shareholders who have been with us all along, and I thank you for being sticky and being along all this way. But the journey really now is just starting. Even though we kicked off in June of 2021, the journey is now just starting, and there is so much that we still have to do, and we're going to frame this a little later on in this call. But the first pass at this increased Moss Lake with 35% more tons and 33% more contained gold. And that is, I think, a tremendous result of our team, tremendous result of Pete and his people who have, they've worked, diligently since we started in trying to understand this better. So we still have many targets along strike. The current resource is still around 2.5 kilometers long, but we have 11 kilometers of strike that we need to test over the next period of time, and Coldstream as well. The distance between Coldstream and Moss Lake is about 11 kilometers. So this is open along strike. It's open at depth, and there are a number of potential parallel shears that will be available to make this even wider, because Pete has stepped out on some holes. We found mineralization. We've reported it in the market. And quite frankly, I think there is opportunity here, in every direction. And although we know there's a bit of there is an underground resource here, we were not reporting any underground resource at this time, but the mineralization goes quite deeper than the 350 meter shells we use. So, I am, as I said, I'm excited. There's so much optionality right now for this company. We have optionality at Moss Lake in every direction, and we're going to see our focus on the next drill campaign expanded even bigger. And like I said before, there's only so much capital we have and only so much time. And in this marketplace, this is very difficult. It's very difficult to raise money, but so we have to prioritize our capital, and we are prioritizing it at Moss Lake. We will be doing some scout drilling maybe later on. We will get up on top of the ice, hopefully this winter, if we can raise the appropriate amount of capital. But I also think that we have we have an opportunity here, an optionality here to really expand the global resource over time. This is, I said back in the spring, I think this is a tier 1 asset, and we're starting to prove that. Not only that, this is potentially one of the highest grade open pit development projects in Canada. This is going to be quite significant. So our focus is on making it the highest grade open pit development project in Canada. So rather than processing 0.7 or 0.8 or 0.9, we're trying to put something together that's a little different, and the strategy will align with that. So I'm gonna turn it over to Pete right now. Again, I thank everybody for listening, and we're going to take try and get everyone's questions in the hour today. But I am really excited about where we are and where we're going to. One of the things I haven't talked about, and we originally thought that we were just going to drill this out to a global resource and pick a number, whether it's 10 million ounces or greater, or whatever the number is. We were just going to drill it out to as big as we could because we thought that would get value. The market has changed. The market doesn't want another 10 million ounce, 0.8 to 0.7 gram deposit. They're not giving us value for it. But I think this high grade potential phase 1 project the market will give us value for it, because grade is a real driver in all of this, and I think that's where we separate ourselves and differentiate ourselves with our peers is going to be in grade, and if we can maintain this 2+ grams a ton as we grow the resource, that is going to be a significant result. And so doing a PEA, and this is a bit of a pivot from what we've told the market back in the summertime, because we didn't have all of this information. Doing a PEA in February, March of this year, I think is not the right use of capital, and I'll tell you why. It'll cost about $70,000 or $80,000 to do, first and foremost, and I think that money is better spent in the ground. Second of all, it's a snapshot in time, and we can take a PEA and say, hey, yeah, we've got 2 million ounces of 2.1 million ounces of 2 grams, and we're going to try and wrap a project around this because we have this big sea of low-grade material to work with as well. So let's put a project on this, and we can run the CapEx and build maybe a $250 million project and a good production profile and good cash flow, and that all sounds good and is nice. But the reality is we're just starting, and why spend that money on a snapshot in time that's not going to be relevant going forward? Everyone can do the back of the envelope math on what that project would look like at 2 grams and 2 million ounces. Everybody can do the back of the napkin, calculation on that. So I think what we're going to do is wait. We're going to wait until we get the rest of the data and the updated holes from the wintertime, and we can do a proper, a full mineral resource estimate, and then take a look at where we are from there, and then reprioritize our drilling, reprioritize our strategy. Because if we have 50% of the data still to come in, this could grow significantly at Moss Lake, and I think that is the whole rationale why we're not going to do a PEA. And our new presentation we're going to be putting out tomorrow on our website will reflect that, and you'll see the current presentation reflects that we were going to do we're going to do a PEA in the first quarter of this year, and I think we're changing our mind from that because I just don't think there's value in it. So I'm going to flip it over to Pete, and he can walk you through some of the more granular detail of this press release we just put out.
Okay, hi everybody. My part of the presentation is going to be a little bit technical. My background is with feasibility studies, and so we've very much taken a look at this project as to what it requires to get it into production. Just to start off with, this is the resource that we inherited, the Innovexplo model from 2013. It was based on the data that everybody had to hand, which is based on a limited understanding of the geological controls. And when we came in, what we saw was an opportunity to get our head around the geology, to understand where the high grade is, because we understand that the high grade is what makes a mine. And we certainly saw more potential for higher grade zones in this than I think people perhaps recognized. This historic estimate is still a good global number. The average grade was around 1 to 1.1 grams per ton, and that's what we've found in our larger resource. So the mineral resource stacks up very well. What we've done is identify the grade distribution in a much better way. And so this is the footprint of our model in the same area. And you can see, if I just go backwards and forwards a few times, you can see where we've expanded the footprint of the resource, particularly through the parallel structures, a little bit on strike, and certainly in the southwest, where we've done a lot more drilling and we've been able to build this out a lot better. The red zones in this model are our high grade shears. You will have seen from the drill intercepts that Brett reported earlier that we do have significant zones of high grade in here. And by building those out, it enables us to look at scheduling in a mine plan to bring all of those ounces forward. That's part of what the PEA will review. But as Brett says, we still have a fair way to go before we get to that PEA stage. And I'll just say at this point, the more options that you can evaluate in a PEA, the more effective it is in building the framework for a pre-feasibility study. Right now, from a metallurgical standpoint, we've done bottle roll tests only. The recoveries are between 80 and 90% across the deposit. The lower grade zones typically have better recovery. But for this study, this optimization, we've used 85%. We want to evaluate gravity recoverable gold in here. We want to evaluate flotation. We feel that we can do better with the cyanide leaching. And we also want to look at heap leaching of the low grade as an option. It's not something that's been done in Ontario, and it may be that it's just not possible, but we want to have a look at it. Basically because we see a system of where mining this deposit, we would prioritize the higher grades in the mine schedule and either stockpile the low grade or leach it. This is our statement. You would have all seen this in the press release yesterday. Just to put some flavor behind this, of all the money that we've spent on the project to date, this has basically cost us $5.75 an ounce in addition to the $13.20 that we acquired the project for. Most of the money that we've raised has gone into the ground, as it should. When we evaluated the project, we used fairly conservative costs. CSA Global, who did the work, are a very professional outfit. They've got their finger on the pulse of where costs are these days. So our processing costs are in US dollars, $250 a ton for mining, $12.50 for processing, $250 for G&A. They're roughly double the costs of what other companies have used over the last few years for their constraining pit shells. But we feel that that's prudent in this inflationary environment. And the other thing that I would add is there is potential for 0.8 to 1.4 million ounces of additional mineralization that's sitting underneath the pit. It's just that at this stage in the project, our understanding and the amount of drilling that we've done beneath this pit shell is insufficient to be able to quantify that as a resource. But there's certainly that upside to this number. Where does that put us in the grand scheme of things? So we've looked at all of the NI 43-101 reports over the last 10 years for the other deposits in Eastern Canada. We've subtracted out the underground resources and just looked at what they have in open pits so that we're comparing apples with apples. And you can see that our total resource sits in here at 4 million ounces at 1.1. We have the potential, we feel, to grow the deposit in this direction, slightly higher grade and more tons. This number comes from a much broader search that we did, search ellipses that we use. So it's an immediate potential from our drill program. And importantly, the higher grade component, the shear zone hosted component of this deposit, sits right up here as one of the highest grade resource subdivisions that we have in Canada. So this is what it looks like within our pit shell, with everything built around the high grades and the lower grade zones coming in. We certainly see potential for these pits here to join and for the southwest zone to be bigger. And we also have drill intercepts out here in the south that we are yet to drill around and add into the deposit. Cross-section wise, you can see that the high-grade shears, there are several within a parallel zone through here. We've built the low grade as like an alteration halo around this. You can see that we have other zones out here in the south where we have not yet modeled high-grade shears. We feel this is an area where we will add. Certainly it grows at depth, but as I've said many times, to be able to make a deep pit, you need to go wider, and we certainly see the potential for that. And this pit, for this time around, has grown from the previous whittle shell of about 450 meters wide to 650 meters wide. So we've certainly grown the tons in this deposit as well as the grade. And within the district, we know that we have gold mineralization and drill holes all the way along this trend to the northeast and to the southwest. We have grade in holes sitting in here. So we see this whole structure in here as live. And we certainly will be looking to step out and evaluate these zones in the coming sort of 6 to 9 months. We do have a parallel zone. This extends up towards East Coldstream, and it extends down towards Hamlin. And we have a number of geophysical anomalies just off the bottom of this slide that have moss affinities, and so we see this growing down in this area in the south as well. So a lot of upside. That's an 8-kilometer strike just within this zone. The 11 kilometers that Brett referred to is adding a number of other structures onto this, particularly in the south. And I think what we're finding is it's probably much bigger than that. We will know more when we get the results from our summer soil sampling program, and we'll have had the chance to have built out and prioritized our exploration targets. And my last slide here, just sort of putting our program together. We've commenced metallurgical studies. Ausenco is taking the lead on that. We will, once we get that data in and we've had a chance to assimilate the historical data, which we are relogging, resurveying, resampling, we will build a new resource update and then move into a PEA in sort of end of Q1, Q2 next year. And at the end of the day, what we're really looking to do is to accelerate this into a PFS. And all of the work that we're doing is supporting that, including our environmental studies. And that's really the technical story of Moss Lake. back to Brett.
Okay, Pete. Yeah, thanks for that. I even when walking through your slides, it continues to amaze me just the sheer potential that this project has. And we've always believed it. And early on, when we started to look at data and we conducted the VTEM survey and we started to kind of hang all this together, I got laughed at by saying, I think this is a potential tier 1 asset. But this is a higher grade starter project that probably sensitizes down to a $1,400, $1,300, $1,200 gold level and is still profitable. You'd make a construction decision at $1,200, but that's where the low grade kind of fails down. These low grade deposits, don't sensitize down that far. They all look good at $1,800, $2,000, $2,200 gold. But what we're trying to do is come up with a project that we can do anytime. We can start now, and we could work a schedule to get that into production as soon as possible. And you have this low grade optionality that if the gold price ever does run, then you could make decisions to scale up and scale up significantly, because they will be big earth moving exercises when we get around to them. So, and then let's not forget what I said earlier. This is in an area that's on the Trans-Canada Highway that has 10-cent kilowatt-hour power around it. So building a big mining camp here is, I think it is inevitable. And I don't take the view that gold's going to go to $4,000. I don't take the view that gold's going to see $3,000 anytime soon. But I also don't take the view that gold's going to go back to $1,200 or $1,300 either. So I have said in my mandates many times that I think gold's going to trade between $1,800 and $2,200 for the foreseeable future, and I still believe that. I said we were going to have pullbacks under $1,800 and blowouts over $2,200, but they won't be sustainable. And this is what I think we've just seen. We've just seen kind of a 10-month pullback based on the macro, and I think we're going to see a smaller, stable gold price going forward as the U.S. starts to pivot prior to the election. So that's really what we wanted to update everybody on today. I think it would be really good to take some questions, and if we've missed anything, to give people some deeper granularity. So I'll turn it back to Dasha.
Great. Thank you both so much. We have a couple questions here, but if you do have a question, now's your time to submit it. The first question we have here is from Eric. He says, loved the NR yesterday and very pleased to be a shareholder. With the resource being open on strike and depth and having 35-kilometer trend, how big do you think you can grow this deposit?
I got to calibrate that. We don't have a 35-kilometer trend that we know of yet, but from toe to toe of our land package, it might be close to that, but we don't have a 35.
If we include the Vanguard grounds, it's 35 kilometers from from Hamlin.
Okay, I thought it was a little bit less. I thought it was a little bit less than that, but anyway, but whether it's 30 or whether it's 35, I know one thing: it's quite big. And how big can you grow this? I don't think Pete will put an answer to that, and I certainly won't put an answer to it. But you can start to see the fabric of how this can grow, and it has to grow with stages. It has to grow with drilling. It takes time. You don't build a detour in 5 years. You don't build, Goldstrike in 5 years. You don't build Nevada Gold Mines in 5 years. These are generational size mines that grow and flex and pull back, and sometimes you have multiple operating areas. You have multiple, and possibly underground and open pit at the same time. These are mining camps, and look at Timmins, and look at Val-d'Or, and look at Red Lake. Although all very different in their own right, and the Shabandawon Greenstone Belt being, more typical of what we're seeing. But I think we've just taken the blanket off a big camp, and we've got an extremely large land package here that's well advanced on the understanding of development. So, we're not done yet, and we're far from done. So yes, we'll be able to continue to grow the resource, and it's a function of time and capital to be able to do that, and market willing, and capital markets available, we will continue to pursue this as fast as possible. The sooner we get through this program, the faster we can make other decisions.
Great. Thank you. Howard is asking, do the cost of the estimate of resources use Canadian dollars or US dollars?
Sorry, yeah, they're Canadian.
Pete?
So, yeah, that's based on our Canadian budget. Yeah.
Great. Thank you for clearing that up. Greg is asking, what percent of the 50 million is going into the ground versus administrative and other costs?
Yeah, I would say, first of all, 15 million or 12.5 million of the 50 million went to Wesdome as part of the transaction. I would say that our corporate costs are extremely small. I work out of I don't work out of an office. I work out of my house. We have a small back office in Vancouver that manage our accounting, and that's it. And we have other costs at the end of the day. If I broke down the 50 million, or let's call it 45 million, we may have put 35 million into the 36 million into the ground, and we still have 5 in the kitty. And I would say we burn anywhere from 100,000 to on average 100,000 to 140,000 a month for corporate and G&A, and that is strictly whether there's conferences, whether there's advertising, whether there's other media, the things we do. If we're leading up to conference season like we are right now, and I'm at a conference right now, then I think we'll see obviously higher costs. But you strip all that out, like we did this summer, we were burning $50,000-$60,000 a month. So on average, it is very it's very low. Put a number to it, probably 92% of the capital we raised went in the ground.
All right, thank you. I don't see any more questions here. If you have any, now's your time to submit them. I see some nice comments in the chat, but no more questions. So if that's it for everyone, I just want to thank both Peter and Brett, obviously, for the presentation, and for everyone who joined today. We will be sending out the recording, like I said, and if you do have any other questions, feel free to follow up directly with Goldshore, and if not, you can find more information at their website, goldshoreresources.com. But with that, I think we'll close things off here, and I hope everyone has a great rest of their day.